And for more on this, we can go to Jamil Ahmed, Chief Analyst at GTC. Good morning, Jamil. There's a lot of relief on the markets today.
A lot of relief following what is another, I would say, swerve in what is this TV series and this drama of tariffs, and nobody quite knows what's going to happen next because it's turning into such a thriller. But essentially, these tariffs being reversed or paused for 90 days, that's led to huge swings in financial markets. We're talking about the biggest moves in the Nasdaq since 2001. Many other asset classes seem to be trying to recover what have been substantial losses, and in many cases dramatic losses over the past week. And it's another U-turn from the administration when it comes to their policies. But we've learned this. It's sometimes about watching what they do in reality rather than what they say in terms of threatening these widespread tariffs that have caused so many concerns over global financial markets and economic sentiment. But 1 week later, it seems that at least for now, that those threats have paused. And let's see how the next episodes of this series play out.
And can you explain any possible reasons for Trump's sudden U-turn?
Well, it could be because of the free fall that financial markets have been in. Some asset classes have not seen losses like this since the weeks of panic in the pandemic. Some have not seen losses like this for many years, and in some markets and jurisdictions, actually not for decades. It could also be the concerns about what might happen to consumer sentiment. If you look at it from the United States perspective as an economy on its own, then consumer spending accounts for the largest component of US GDP. So that might also weigh into it. And it could also be the substantial increases in recession forecasts and threats. There's been a lot of very worrying headlines over the past week after these tariffs were finally announced. Perhaps some of those fears have started to weigh into the mind of decision makers, which is why they've made another 180 or 360 U-turn, depending on how you look at it today.
But China is still the target of massive tariffs, and that's likely to have ramifications well beyond China itself.
Of course, we're talking about the number one and the number two world economies being at each other's throats, to use that kind of metaphor when it comes to trade tariffs. Again, if we look back on memory road, then we do see and remember that between 2016 and 2017, the tit-for-tat trade tariffs that both US and China were putting on each other at that point, which were nowhere near as dramatic as now, that led to the weakest year of global economic growth since the beginning of that decade. And we're talking about the European sovereign debt crisis then of 2011. So we're definitely not sugarcoating things. This is still a very huge negative weight on world economic sentiment. Just because some tariffs have been paused or reversed in some cases, it doesn't mean that the world economy is out of the woods. It just means that potentially this is more about US and China rather than the United States fighting on all fronts, which it was up until just less than 24 hours ago.
Thank you very much for that, Jamil Ahmed, Chief Analyst at GTC.